Hello and welcome to our final lesson of the normal course, CLIL course in business economics about Candyland. It's about step 9, it's about our final balance sheet. So, what happened? Well, we have computed the net income or loss and we have to reconcile this result with the balance sheet. We have taken a picture. You remember that the balance sheet is more like a picture in a given date of all the assets, i.e. the investments, and all the liabilities, i.e. the claims on these assets that comprise the balance sheet of a firm. Well, after 3 months we are taking the same type of picture and we see what has changed. So we can track the movement, the evolution of the firm, of the company, and see what are the effects of the various decisions taken by management on the economic results of it. By comparing these differences, it's basically possible to see how the structure of the company has changed and evolved. Remember, we are talking about stocks, okay? A stock of investments and a stock of debt and equity. Well, first of all, unless we have a zero net profit, we know that equity has changed. It has increased if the net income was positive. It has decreased if we have produced a net loss. So if the equity has changed, something else must have changed. Look at the basic equation that assets are equal to debt plus equity. Okay? Well, if this is the case, we have equity going higher, assets must have gone up, or debt must have gone down, or there is a combination of the effects. Okay? So, let's start thinking about the asset side. Probably fixed assets are lower because we have computed depreciation. Inventories are likely to have changed. It's very difficult that inventories stay the same from one quarter to another. And so we know that if they have increased, there will be an increase in current assets. If they have decreased, there will be a reduction in current assets. And then certainly cash on hand will have changed. So cash in our bank account, cash in our cashier, and this will reflect the cash flow that the company has generated during the period. The balance, so between current assets and fixed assets, is likely to have changed. And what about the other side, the liability side? Well, that levels depend very much on the repayment that you have decided to do, or the amount of extra credit that the institutions have decided to give you or to take you away from you. Instead, equity, we know, has gone up mainly because of the results of net income. So it has increased in case of net income or decreased in case of a loss. But it could have changed for other reasons too. Say, there could be capital variations that have been decided by the majority of shareholders. There might have been a capital increase or a capital reduction. And so, we have to see what has happened to our firm. Let's have a look at the balance sheet of Candyland at the end of 2018 and at the end of the first quarter of 2019. So we see this is a direct comparison of the same company with the same balance sheet that has evolved during a 3-month period. Okay? First of all, let's have a look. Total assets at the end of 2018 were 150,000 euros, and also total liabilities were 150,000 euros. So it was a balanced. Okay? What happened in 2019 at the end of Q1 2019? Total assets have moved up to 168,540, and also total liabilities. So again, the equation assets equals to debt plus equity always holds. The equation is always true. And at the same time, you can find your equity as the difference between assets and debt. Okay? But anyway, if you look at how the company has changed, well, we can see that, for example, we have more cash at the bank. ingredients have remained constant, whereas we have some stocks. So we have some 12,400 euro worth of candies in stock that will basically we can sell it in the course of the quarter. Prepaid expenses are the same because we have simplified quite a lot things. And let's have a look at fixed assets instead. What happened? Well, the robot has been used, as it has produced 100,000 ice cream candies, and we have calculated that depreciation equals to 3,750 euros. So the net value of our robot, which represents the totality of our fixed assets, has gone down from 45,000 to 41,250 euros. The sum of these two macro categories gives you 168,540, which means that the total investments of our company have gone up. What happened to the liability side? Well, that is constant. This debt has generated some interest expenses, but basically the debt is constant. We haven't repaid it. The bank hasn't asked for some money back, and we haven't got any new loans. So that is constant. But what has changed? Well, our equity, which has moved up from 100,000 to 118,540 because we have 18,540 euros in returned earnings. That is the amount of net income generated by Candyland during the first quarter. The sum of these two gives the total liability side, okay, which is equal to total assets. So, again, this is the summary. We have run the first circle. We have started with a balance sheet that was basically the beginning of our Candyland. We have worked for a full quarter in order to produce positive results. We have generated a flow of revenues and a flow of costs that have given at the end of the quarter a net income, i.e. a profit. That profit goes into the balance sheet and it increases shareholders' equity, and the picture that we take 3 months after the beginning of our company, after the inception of our company, gives an idea about what has changed. We have a higher current asset portion, we have lower fixed assets, and on the liability side we have the same amount of debt but more capital. That's all. Remember, assets are always equal to the sum of debt plus equity. Always. And this is all, unless you are so brave that you want to try to challenge step X or 10, which is about advanced accountancy, which is recommended for classes from the 3rd to the 5th. Okay? I hope you have enjoyed. I certainly did. And, well, see you soon. Bye.